Good morning. My name is Stephen Nolan, and I'm the Managing Director of the UN-convened Financial Centres for Sustainability. I'm also honoured to be the chairman of this year's Climate Finance Week, which is now in its fourth year. It's been a fascinating week. We're now obviously in the last day. A lot has happened across the week. Several thousand people have tuned in to hear about the different topics within climate finance and sustainable finance. And we also launched Ireland's first National Sustainable Finance Roadmap. The next session we're about to go in, the start of Friday, is really important, and it's organised by the Chartered Accountants of Ireland, and it's focused on sustainable reporting for accountants, the how-to. I'm really looking forward to this. The accountants as a profession have a key role to play in the sustainable finance agenda. Before I hand over to my colleague Susan, I also want to say at the end of the session, we'll be going with Seamus Hand, who is the managing partner of KPMG Ireland, and Seamus and I have a one-on-one discussion about what KPMG are doing in this space from a global to a local level. I'm delighted that KPMG is sponsoring today's event, and I'm going to be really looking forward to talking to Seamus later on today. Susan, if I can hand over to you to get us going in this panel, please.
Thank you very much, Stephen. Good morning and welcome to this webinar on sustainability reporting, hosted by Chartered Accountants Ireland. I'd just quickly like to thank Stephen Nolan and his team for an outstanding achievement with Climate Finance Week. This is the second year Chartered Accountants Ireland has taken part, and we're delighted to be involved. As Stephen mentioned, this year we're focusing on sustainability reporting, and I'm joined by Dave Fitzgerald, who leads responsible sourcing for KELLOGG's, Caroline Tully, who's AIB Group's Head of ESG Reporting and Ratings, and by my colleague in the Institute, Dee Moran, Head of Professional Accountancy. We'll be hearing from our speakers on the practical aspects of sustainability reporting and on working with your supply chain. My name is Susan Rosney, and I'm Public Policy Officer with Chartered Accountants Ireland. Sustainability is a key public policy focus area for us as an institute. The concept of for tomorrow, for good is the central ethos of our strategy, and it underpins everything we do. As a membership body, we have 30,000 members operating at all levels of the public, private and not-for-profit sectors, so we have a significant reach into the economies of Ireland. Therefore, we're working to embed sustainability in all aspects of the members' experience along their careers, from student to practitioner. So not only is sustainability embedded in our final admitting exams, it's also integrated into our continuing professional development programme. It's a topic of our events, such as the Sustainability Conference this year, which is the Institute's first conference dedicated entirely to sustainability for accountants. We also run other events. I've got one on the screen there, which is the public sector event that we ran on public sector decision making and ESG, but there are many, many more. We're also enjoying a leadership position. Chartered Accountants Ireland enjoys a leadership position with the wider business community. And we use this to encourage and support our members to take action on climate change. We run campaigns celebrating our members who are taking action on the climate crisis. And on this slide, I'm highlighting the current and most recent campaign, which is the 1,000 Chartered Accountants. I'm just going to go back there, sorry. The 1,000 Chartered Accountants campaign, where we're celebrating our members who are acting on the climate crisis in their day-to-day work. We also represent the views of our members in our responses to national and international consultations, and we try to lead by example as an institute. For instance, we're working on becoming the first carbon neutral professional accountancy body on the island of Ireland, and we've embarked on an ambitious environmental and climate impact project to achieve this. Finally, we produce a lot of content for members on sustainability. That central image there is a screenshot of our Knowledge Centre, where we have an online sustainability centre where content is freely available to members and non-members. And on this slide, I've also highlighted 3 publications in particular. The first on the top right is the Sustainability for Accountants Guide. The second is a glossary that we're bringing out next week on climate essentials for accountants. And on the bottom right, there is a publication, a guide to sustainability reporting. As I mentioned, these are freely available on the website to both members and non-members. And I'd urge everybody to have a look at those if you've any questions on what we're doing. In this session, our 3 speakers will deliver presentations, followed by a Q&A session. and you can ask questions in the Q&A feature at the bottom of your screen. We'll do our best to respond to each of these in our Q&A section. Now I want to introduce our first speaker, Dee Moran. Dee is a Fellow of Chartered Accountants Ireland and is Professional Accountancy Lead with the Institute. Her team is responsible for the technical policy agenda of relevance to the Institute and its membership, and they work to coordinate policy approaches and develop guidance. Dee leads the Institute in the area of sustainability reporting, and today is going to give an overview of the progress in the international drive to consolidate sustainability reporting standards. So Dee, over to you.
Many thanks, Susan, and thank you to the Climate Finance Week team for the opportunity to be here. In this session, I'm going to give a brief outline of what's happening in the world of sustainability reporting, where it is going in the future. Where it is going in the future, the situation with SMEs, and outline a few thoughts on assurance. You cannot turn on the radio or open the newspaper today without the terms climate, environment, or sustainability being there. The whole area is certainly a hot topic, and therefore reporting on it has also become very important. Historically, the capital markets have been informed by financial reporting, which measured and reported on the performance of the entity. But as ESG awareness has skyrocketed, more information is required, and increased regulations, guidance, and standards now at least provide a framework for both measurement and reporting of sustainability information. What this means is that many jurisdictions have introduced mandatory disclosure requirements, primarily for larger companies. In fact, a recent study by Carrots and Sticks in the UK identified 614 sustainability reporting requirements across 84 countries. So due to the significant growth in stakeholder interest in sustainability information, several standards and frameworks have been developed to assist companies to measure and report on the issues. And this slide just gives you some idea of the sheer number of frameworks and standards that there are. I won't go through them in detail, but the more popular ones include the TCFD and the GRI, the Global Reporting Initiative. And Caroline will talk more about that in her presentation. So this alphabet soup of frameworks has created quite a lot of issues, particularly for those businesses that operate internationally and are affected by regulatory, legal, and stakeholder expectations in more than one jurisdiction. And there have been calls from many of these stakeholders for greater coherence, consistency, and comparability in content, and overall for convergence between the different standards and frameworks. At the global level, the International Financial Reporting Standards, the IFRS Foundation, were perceived by many as ideally placed to play a role in the global standards. Therefore, they issued a consultation paper in April 2020 outlining a possible approach to develop an international standard for the preparation of sustainability reports. There were in excess of 570 responses from all over the world to that consultation. And I understand that they had expected about 300 responses. So I think that just gives you an indication of the level of interest that there is in having a global standard. We in Chartered Accountants Ireland responded to the consultation, and we agreed with the proposition to have a global standard. But we also stressed that they needed to use the other frameworks as building blocks and not start from scratch. The responses to the consultation confirmed that there was significant support for the proposal to have global standards and to set up an international sustainability standards board. And the roadmap for the next phase for this ISSB is expected to be published around COP26. which, as you know, is the UN Climate Change Conference. And this will be held early next month in Glasgow. And we understand that initially this will focus on climate matters, but it will also begin to work on other ESG matters. There has been some chatter about the publication of a climate standard in mid-2022, which would be extremely speedy, but we should know more about that when the roadmap is published. They have also committed to build on the other frameworks, such as the TCFD, which is the Task Force on Climate-Related Financial, and it is expected that they will work with the national standard setters to ensure coherent application. So all eyes will be on COP26 and watch this space for the roadmap and what we can expect from the Sustainability Standards Board. So then on the European front, in April of this year, the European Commission issued their proposed changes to strengthen the nature and the extent of sustainability reporting in the EU over the coming years. And this one is called the Corporate Sustainability Reporting Directive, or the CSRD. And this is expected to replace the 2014 Non-Financial Reporting Disclosures Directive, which is the NFRD. The proposal seeks to cover large undertakings as well as those listed on EU regulated markets. And it is expected that this new directive would apply to approximately 50,000 companies, whereas the NFRD applied to about 6,000 companies. So it is intended that this would apply to companies that meet two of those following three criteria. So 250 plus employees, 40 million plus on takeover, and 20 million plus on total assets. And small and medium listed companies would get an extra 3 years to comply. Also, in contrast to the NFRD, the CSRD sets out in far greater detail the non-financial information that entities should report. And as expected, it would introduce mandatory EU sustainability standards, which would be prepared by EFRAG, which is the European Financial Reporting Advisory Group, and then adopted via secondary legislation. It also would introduce the principle of double materiality of non-financial reporting, which is, where how sustainability issues affect, on the one hand, a company's performance and their development, and then on the other hand, the company's impact on society and the environment. It is expected that in scope, large companies shall start reporting under the CSRD after 1 January 2023. And the first drafts of this are expected in June 2022. But it's not just standards that we need to look at. We also need to look at the regulated entities. So while there are lots of things happening in the global and the EU space, requirements may also arise in the form of regulations. So regulated entities such as financial services, charities and credit unions may also be subject to requirements to report on sustainability criteria from their regulators. And for example, the central bank assessed the risk of credit institutions using a PRISM framework, which takes into account the environmental risk. In terms of private equity and venture capital markets, it's a similar situation. Asset managers are driven by regulatory requirements, plus also other matters such as the UN principles for responsible investment. And the PRI has over 2,700 participating financial institutions. Stewardship codes, like the UK Stewardship Code, for example, which many of the UK asset managers and owners have signed up to. And increasingly, there is pressure from institutional investors to focus on sustainability criteria for investments. So what about the SMEs then? So these are, I suppose, at the next level. And while it's not mandatory for SMEs to report on their sustainability initiatives, many are voluntarily doing so. And some of the reasons why include, well, many see it as the right thing to do. And it's also become increasingly more important in supply chains for companies that are required to report on their sustainability. And we will hear more about this from Dave shortly when he looks at this from the KELLOGG's perspective. There's also a sense that to retain and attract talent, entities must be looking at their ESG credentials. And there's also a suggestion that the potential is there for banks to have to hold more capital for carbon intensive lending. So that really may influence. Customers are demanding it. And they are also increasingly looking at their ESG, at the ESG credentials of entities behind products and services. I think there's a feeling also that regulation is definitely coming and that preparation is required. And the extent of sustainability reporting for SMEs needs to be proportionate to their size, I think, though, and the cost should not be prohibitive. So I'll just say a few words then on assurance. And there are 3 pillars to assurance. And I think that, assurance will play an important part in the sustainability journey. So from the governance perspective, I think it will be provided by boards. So it is important that they have the knowledge and skill sets to drive it in the organisation. And also from subcommittees like sustainability and audit ones, which will be very, very important. From an external assurance point of view, auditors and perhaps other professions will play their part. The CSRG, for example, proposes a limited level of assurance, where the auditor will have to express an opinion about the compliance of the sustainability reporting with EU requirements. And from the supervisory side, there'll be the regulatory inspection, the authority oversight, and I think just the assessment from the public also. So that's a whistle-stop tour of what is happening in the sustainability reporting space. There is a huge focus on it at the moment and a lot happening at global and EU level. So I think the next 12 to 24 months will be really interesting. So thank you very much, and I'm going to hand you back to Susan.
Thank you so much, Dee. That was absolutely fascinating. And what is very telling, as you just mentioned, is how much is happening at global and EU level, but then also how that is impacting on companies of all sizes. And hitherto, I think people have always thought about the standards as being applicable to very large companies. But as you say, and as we're going to hear from Dave as well, it's applicable even now to SMEs. So before they have the compliance obligation, the obligation rather to comply with these regulations, there's a lot that they should be doing, potentially also must be doing in order to be part of a supply chain and for other reasons that you mentioned to satisfy the requirements of stakeholders. So thank you very much. And I think we'll hear more from that in the Q&A as well. I'm now going to hand over to Caroline Tully. And it's going to be very interesting to hear about some of the principles Dee mentioned and how they operate in practice. Caroline is AIB's head of ESG reporting and ratings. She leads the bank's ESG reporting and disclosures, as well as contributing to the development and implementation of AIB's sustainability strategy. Caroline also represented sustainability on the working group behind something we heard about a lot, which is AIB's green bond issuances, which included the 1 billion Tier 2 green bond issuance last September 2020. This, as you may recall, was the first green bond issued by an Irish bank and only the second Tier 2 capital issue by a European bank. Caroline is co-lead also of the Principles for Responsible Banking Reporting Working Group, as well as a member of its Implementation Leads Working Group. This is part of the United Nations Environment Programme of Finance Initiative, which most of us know as UNEP-FI. This supports the implementation of the principles amongst the 200 plus signatory banks globally. But Caroline is also a member of the Sustainable Finance Forum of Banking and Payments Federation of Ireland. Caroline, over to you.
Thanks, Susan, and thanks again for inviting AIB to be part of the conversation this morning on ESG reporting. And good morning to everybody who's joined the call. So for AIB, sustainability is all about building trust and enhancing our social license to operate, as well as ensuring the resilience of our business long term. And sustainability was embedded at the heart of our business in late 2019 when sustainable communities became the fifth pillar of our group strategy. So today, I'm going to talk to you a little bit about our practical experience in ESG reporting. As you've heard from Dee, the ESG reporting landscape is quite broad. And I suppose just to summarize it, I would say it's made up of 5 sort of distinct elements. So you've got regulation-driven reporting or disclosures, you've got principles-driven reporting, ESG reporting frameworks and standards, you've got certification and benchmarking. So that's the likes of, say, your CDP or the Business Working Responsibly mark that's managed by the Business and the Community Ireland. And then the 5th element would be ESG ratings. So, you know, we have to make disclosures to meet all of these elements. Some of them are voluntary, some are mandatory, some are disclosed privately, but most are publicly disclosed. So it's safe to say there's a lot going on in this space. I've on this slide here, I've set out how we have evolved our ESG reporting over the last number of years. So our first sustainability report covered financial year 2016. But actually at that stage, we'd already been making some ESG disclosures through our CDP submissions for a number of years. And in 2017, when we were developing our first sustainability report, there were no ESG or sustainability mandatory reporting requirements at that stage. And we started reporting in accordance with the Global Reporting Initiative, the GRI standards, which is a voluntary framework that Dee mentioned. And there were a few reasons we went with the GRI. You know, it was a well-established standard. It was considered to be, you know, the most widely used. I think even today it's in use in about 90 countries worldwide. And it was very highly regarded as, you know, it was considered to be the gold standard. And we wanted to set the bar high for our ESG reporting right from the outset. So I suppose another reason we looked at them was because the standards themselves had provided, you know, good supporting information on how you would approach reporting against the requirements. And, you know, they gave us good guidance in terms of how we might respond. And I suppose the other thing, being very practical, was because it was widely used, it was something that we could see how other companies around the world had responded on. And that was really helpful for us in terms of when we were setting out. If we move on then to financial year 2018, we obviously were continuing to report in accordance with GRI and enhancing our disclosures year on year. And then we began reporting against the EU Non-Financial Reporting Directive. And this was the first mandatory reporting requirement on ESG matters. So I'm sure you're all very aware of it, but for NFRD, you are required to report on it in your annual financial report. And as our sustainability report is, you know, the key source of our supporting information for both NFRD and, you know, the broader ESG disclosures, from this point onwards, both our annual report and our sustainability report were published on the same day. And they go through the same governance path. By September 2019, we had become supporters of the TCFD and we joined the United Nations Environmental Programme Finance Initiative and signed up to their principles for responsible banking. And both of these, again, are voluntary commitments like the GRI, and they have their own specific reporting requirements. And in our most recent sustainability report, we set out our progress in implementing both of these. That takes us right up to the present day. So earlier this year, AIB committed to the World Economic Forum's Measuring Stakeholder Capitalism metrics, as well as the UN Global Compact and the Net Zero Banking Alliance initiatives. You know, we support WEF's drive to accelerate consistent and comparable disclosures, and we were the first Irish company to sign up to the initiative. So in our next report, we'll be starting to incorporate disclosures on these initiatives into our reporting, and that will obviously continue in the years ahead. All of our sustainability reports are published on our website. You can find them at aib.ie/sustainability, and Deloitte have provided independent limited assurance on them for us. Just moving to the next slide here, I'm going to talk a little bit about materiality, and Dee mentioned this in her presentation earlier on as well. So for companies who are reporting in accordance with GRI, they have to complete a materiality exercise. And this involves engaging with both internal and external stakeholders to determine what they see as the material topics for your business. We complete our materiality exercise in partnership with KPMG. And in doing the exercise, we consider the best practices and approaches of peer banks. We present our stakeholders with a universe of ESG or sustainability topics that are relevant to our business. And we ask them to tell us which of these they see as being the most material for AIB. The stakeholders we talk to include, management within AIB, stakeholders who are impacted directly by our business. So, for example, our customers or employees, stakeholders who are providing oversight of our business, so that might be analysts or regulators, and also stakeholders who are impacted indirectly by our business, so that would be the likes of communities, non-government organizations, etc. And this slide sets out the outputs from our Q4 2019 materiality exercise. So you can see there on the left-hand side, the topics are ranked in terms of importance to our stakeholders and also in terms of strategic importance. And on the right, we've set out the full list of the 14 material topics. And in our most recent sustainability report, you can actually see how we manage each of these topics. We report against each of these headings. Just to say that stakeholder priorities, can evolve over time. So the best practice would be to update your materiality exercise every 2 years, and we're currently updating ours at this point. Just moving to the next slide then, ESG ratings. So I'd mentioned this at the outset as well. And ESG rating agencies rate public companies based on their ESG policies, systems and measures. So what they do is they gather information from multiple public sources, including, published reports, from media reports, non-government organizations reports, or reports from other stakeholders. They each use their own specific assessment methodologies to assess companies, and they typically take into consideration, the material ESG topics for industries in which the company operates, the countries in which they operate, and so on. Companies can be assessed without their knowledge and/or their participation, although typically the agencies will try and contact the companies they're assessing. And this is usually to ask them to validate or verify the information they have gathered to make their assessment, because it's obviously really important that the information is accurate and up to date. There's quite a few of these agencies out there. The best known are probably the ones on the slide here. So MSCI, Sustainalytics, and S&P Global. And we participate in their assessments as they resonate best with our investors. And in doing so, this has enabled us to build up strong ESG ratings that we have today, because we better understand the type of information that investors want to read about in our reporting. And we have used this to help us to improve the quality of our ESG reporting and ensure that the agencies, investors, etc., have access to this information. And strong ESG ratings are very important for investors, particularly when they're considering investing in, say, for example, green bonds. It's important that the investments that they make are in companies with strong ESG credentials. So as a knock-on from improving the quality of the disclosures to support our ESG ratings, we can also see improvements in rating agencies that we haven't actually actively participated in the assessments. One of those would be, for example, the FTSE Russell rating, and that resulted in AIB becoming a member of the FTSE for Good Index series in June last year. If you're interested in learning a bit more about ESG ratings, on the last slide of my presentation, I have included a link to a publication called Rate the Raters, and that will give you some interesting insights. On the next slide, I've set out a few tips for those of you who are either starting out on or looking to improve your ESG reporting. So the first point I would have is that, don't just consider your peers, but look also at companies maybe outside of your industry or your clients' industries. So some companies have been doing ESG reporting for a really long time. And even if they're not in the same industry as you are, you can still learn a lot from their experience. There's the World Business Council for Sustainable Development, the WBCSD, produces a report called Reporting Matters. And that actually shares a lot of really good examples of best practices in reporting in companies across many different sectors. The second point then I would say is, consider also the industry specific disclosures. So some aspects of ESG considerations are industry specific. For example, in the banking industry, that might be around, lending products or services. And so therefore it can be useful to consider whether the framework that you or your clients plan to report against has an element of disclosures specific to your industry, because it can sometimes help, in terms of you explaining how your company performs in relation to ESG matters. What I would say is, consider what's valuable to your stakeholders. So the materiality exercise that I spoke about will obviously help you understand, what are the most material topics for your stakeholders. But another thing to consider is how you give them access to the information that they need or they're interested in reading about. Dee mentioned, how busy this whole area of ESG reporting is going to get. I mean, it's quite busy now, but with the increasing amount of disclosures that are coming out of the regulations, this is going to become even more important because there's going to be so much information out there. So think about your stakeholders and think about how they want to access your ESG information. The fourth point here is that disclosure goes beyond reporting. So I would say, if you haven't started this yet, prepare your clients that they will need to start sharing information that previously they may not have been making available in the public domain. And while your reports are a key tool, practically speaking, you're not going to be able to put everything into them. So you might look at other supporting disclosures and maybe you make those available through your website. Those disclosures could be, health and safety reports or protected disclosure reports, your internal policies like your codes of conduct, any whistleblower policies. And making sure that if you are referencing any of this supporting information, that you do it really clearly from your reports and you just make it easy for the reader to find the information that they're looking for. The fifth tip I would have here is that, that old adage, a journey of 1,000 miles begins with a single step. But I'm adding on here, put on your running shoes. So don't wait to have your approach to your reporting perfected before you get started. It is accepted that, when you commence your reporting, you're not going to have everything right from day one, but that you will be progressing it and building out on it as you go along. It is a journey, and I hate saying that word, but it's true. But it's a journey that's in perpetual evolution as well. And, there's so much going on in this space and there's so much coming as well over the next few years. It is moving at a pace. But that said, there's no time like the present to get started. Just on the final slide here, I don't intend to go into this in any detail, but I've set out here some useful resources that might help you get started or give you more information in relation to some of those initiatives that I spoke about, whether it's TCFD or measuring stakeholder capitalism or the GRI. And I've also included some links to the three main ESG rating agencies as well. So, some of them share their ratings publicly for everybody to access. So you can actually click on that and get some kind of basic information in terms of the ratings of companies and categories, the ratings within certain elements of those ratings as well. And there's the link to the Rating the Reporters report as well. So Rating the Raters report, I should say. So conscious of the time, I'll leave it there and happy to take any questions later on.
Caroline, that was absolutely fascinating. Thank you so much. One of the things I really took from that as well is the clarity of communication that is an extra feature of the sustainability world. And I've always loved the way AIB has presented this information. I find it's very clear, but it's also very transparent in showing this progression. And it echoes something you said about people are not expected to get this right straight away. This is changing so fast. So I think nobody can say that they're fully fledged experts in this topic. And you mentioned perpetual evolution, and it's certainly something that I've seen even in the past 2 years. We initially were speaking about non-financial reporting, and that's a term I don't hear anymore. it's everything is very much sustainability reporting, and this idea as well of it beyond your report. It's disclosing information in other ways. In the example that you showed there as well, when you were able to demonstrate this journey, even though I know you're not very keen on the word, but it certainly is something that everyone is having to demonstrate visually or otherwise their journey throughout this sustainability reporting process and disclosures. So I was fascinated by that, and thank you very much. I'm now going to introduce our third speaker, Dave Fitzgerald. Dave leads European responsible sourcing for Kellogg's. He's worked for over 20 years in the food and beverage sector, and in his current role, he works with Kellogg's suppliers to ensure that the ingredients, packaging materials and services that they supply are sustainably produced and delivered. This includes leading the Origins programme, where Kellogg's invests in sustainable agricultural products, including a wheat product in the UK and a rice project in Spain. Today, though, Dave is going to talk through the sustainability supply chains at Kellogg's, end-to-end sustainability along Kellogg's value chain, and some of these Origin projects. So I'm delighted that Dave could speak with us today, and over to you.
Thank you, Susan. Good morning, and thank you for the invitation to speak here today. So, as Susan said, I'm going to speak a little bit about how Kellogg work across our value chain and how that links to reporting and some of the reporting standards that were mentioned today. So, globally, Kellogg reports through frameworks including GRI and SASB, which have already been mentioned, and we use platforms like CDP for carbon accounting as well, which are globally recognized. So I'm just going to move on a little bit and just talk a little bit about Kellogg's. So I'm sure many of you know who Kellogg's are. We're a leading global cereal and snack company. Many of our brands are familiar on people's breakfast tables, so Kellogg's Corn Flakes and Cocoa Pops. We also own the Pringles brand, and we have a plant-based meat brand, Morningstar Farms, in the US, and that's a growing segment for us. In Europe, we're headquartered in Dublin. I'm based in our European headquarters, and we have manufacturing facilities across Europe, including the UK and Poland, Spain, as well, and Belgium. So in terms of our strategy. So this is, and I'm not going to go through this in detail, but I just wanted to reflect on how sustainability fits with Kellogg's overall strategy. So we have two levels within the strategy. We have our growth boosters, which are driving our commercial agenda and our top line growth. And we have our heart and soul boosters, which are essentially our sustainability strategy. So there's a focus within Kellogg's on a number of areas around nutrition and providing nutrients of need within our foods, around our food programs and feeding people in need, around the environment, particularly climate change and biodiversity, and around other social aspects, including human rights as well. So this is embedded in our overall strategy and supports our business strategy. It's not a separate sustainability strategy. It lives within our overall business strategy. Why do we do it? I suppose if you look at the journey many businesses take in sustainability, the bottom left is where many businesses start, which is around regulatory compliance. So increasing regulation coming from the EU and from other regulators around areas like climate change, around reporting, as we've spoken about today, around waste, packaging waste, and managing a lot of those supply chain risks as well. So climate change being a particular challenge for food systems in terms of our raw materials, the impacts of weather events within our supply chains. And businesses then also focus a lot, obviously, on efficiency and cost savings, and that links very much to sustainability, particularly in the energy efficiency, water efficiency, waste reduction spaces. So if you're using less energy, you're saving money, but you're also reducing your carbon emissions. So these are often the starting points for businesses. But as they move along that sustainability journey, it becomes more important, and particularly for branded companies like Kellogg's, business reputation is key. And in order to be a leader in in your segment, sustainability is critical. So all of our competitors and peers would have committed to very ambitious sustainability targets. And it's expected now of businesses that you are active and leading in this space. The other bit on the top right, which is I think the interesting area for many branded companies as well, is how you can leverage sustainability from a brand equity and brand value perspective. And this is challenging, finding, are the consumers willing to pay for sustainability? And this is one of the areas that now more and more focus is coming on in terms of how you recognize sustainability through things like eco-labeling, carbon footprinting for your brands. And I'll give an example later on of how we in Kellogg are doing this. So in terms of some of the reporting standards as well and the systems which we use in Kellogg's. So in terms of maturity, as I said, regulatory compliance and risk management is often the base on which a sustainability program is built. But then businesses start to look beyond compliance and look at standards, globally recognized standards and platforms like SEDEX, which is a platform for managing social accountability, labor standards within your supply chain, CDP, which we as Kellogg's report externally to investors through CDP platform, but we also require our suppliers to report to us on their carbon emissions so we can build up a picture of the carbon emissions across the full value chain. We use other standards like farm sustainability assessment to look at sustainability at farm level. And then in terms of leadership, you're looking at areas like science-based targets. So Kellogg's have committed to a science-based target for carbon reduction. This is aligned with the Paris Agreement and the global ambition to keep global warming below 2 and ultimately, hopefully, below 1.5 degrees. And we also then have programs where we invest, like the Kellogg's Origins program, which I'll speak to briefly before the end of the presentation. In terms of the end-to-end piece, this is, I think, where, more and more importance is now being focused on the full value chain for a business like Kellogg. So we look across our value chain from the raw materials sourcing to, through the conversion of the raw materials, our manufacturing, logistics and distribution, and ultimately the customer and consumer. And we look at impacts across those elements of the value chain, the climate change impact, the areas like biodiversity loss, circular economy, which is primarily around waste and, food waste and packaging waste and other waste within our value chain, and also human rights challenges. For some commodities, we would have some high-risk commodities, for example, like cocoa and palm oil in our supply chain, and there are human rights challenges and risks that we need to address within that. Traditionally, within sustainability, the focus had been primarily on manufacturing, on your own operations, on the things you can control. But in practice, for a food manufacturing business, that's a very small portion of your overall impact. So if we take carbon emissions within the Kellogg's value chain, less than 10% of the carbon emissions in our finished product comes from our manufacturing processes. About 3/4 comes from our upstream ingredients and packaging materials, and primarily the agricultural element of growing those particular materials. The conversion of the materials is relatively small in carbon footprint impact as well. So if we really want to have an impact in the climate change, carbon reduction area, we have to be working in our value chain. We have to be working with our suppliers, and particularly upstream as well with farmers on how these areas of our carbon emissions are being reduced. And this is as I said, we use CDP supply chain, for example, to work with our tier 1 suppliers to gather information on what they're doing within their factories and the conversion element. And more now we're focusing on what's happening at farm level. And I'll just briefly touch on that. So we have a commitment to reach 1 million farmers and workers by 2030. And we do this primarily through our Origins program, where we invest in projects at farm level. We've reached globally over 400,000 farmers now since 2015. And this is just an example of some of the projects we have in Europe. So I'm leading projects across a number of sourcing areas. you might wonder why Argentina is here. So the corn we use in cornflakes is actually sourced from Argentina. So we have a project with Argentinian corn farmers. We work with UK wheat farmers, Spanish rice farmers, and we work with grape farmers, vine fruit farmers in Turkey who are producing raisins and sultanas for Kellogg's. And we work across a number of areas and invest significant time and resource in projects where we try to help the farmers develop more sustainable regenerative practices. So practices that will reduce carbon emissions in our value chain, because that is where the impact is for us in our business. So just coming back to the business value piece of this, so why do we do it and how do we activate it? So there's a number of ways we activate this and communicate this. So this is just one example where our Spanish rice project, a very successful project where we've been supporting farmers for almost 10 years now in Spain. So we're using this commercially in store to communicate to customers, to communicate to consumers. And this is very important for our consumers, our customers, retailers. So some of the largest retailers in Europe are very focused as well on sustainability and how they can communicate sustainable products to their customers, the consumer. So commercially for us, engaging with our customers, with those retailers, it's very important to have a sustainability offering. And this is an example of how we've activated that in market in Spain. And also then at a brand level, so cornflakes, which is probably our most iconic brand, we have developed a claim, responsibly sourced corn. It's verified externally by a third party. It's aligned with international standards around responsible sourcing, covering environmental aspects, covering social aspects in the value chain, right back to farm level. So we verify that the Argentinian corn that I mentioned that we use in European cornflakes is responsibly sourced. It's produced in a very sustainable, a very carbon efficient way in an environment that is ideal for growing the particular corn that we need and the quality of corn we need for our cornflakes. So again, back to this commercial value piece, ultimately, yes, it's managing risk, yes, it's reducing costs, but it's also about delivering value for our business. And it's critical that our suppliers, we work with them to develop these types of claims and to have that information to help support our sustainability strategy and delivery going forward. So I'll leave it there and I'll hand back to Susan. Thank you.
Thank you very much indeed, Dave. That was fascinating. And it's the very last thing you said there is almost like a summary of sustainability. It is about managing risk and it is about reducing costs. But fundamentally as well, it is still about surviving and delivering value. And that's very much what you were able to demonstrate there with a brand that almost all of us know. And certainly many of us, even on this call today, will have seen it at the breakfast table and may have been reading that graphic on the back of a cereal pack where it describes that. So I think that's absolutely fascinating. I'd like to invite all of the speakers back onto the screen as well. And we've had some questions coming in, but as always, time is against us. So I've been working behind the scenes with my colleagues to try to condense as many of them into one or two that I think would represent the questions most frequently asked. And I think it seems to be around the area of starting points. And both yourself, Dave, and yourself, Caroline, mentioned the idea of a journey and starting off. A lot of the SMEs in Ireland and across Europe, across the world, are going to be coming to this for the same at the same time. For the first time. That's what I meant to say. And Caroline, I liked the materiality graph that you showed, where you mapped all the various stakeholders and their requirements and the impact that AIB has, and also your slide, Dave, where you showed the impact of the various parts of the value chain. But if I could ask you, all speakers, is there a starting point for SMEs to begin? And what do you think the very first thing they should do? And so I should qualify that a starting point on the journey of sustainability reporting if they've never done it before and if they're coming to this for the first time. I'm going to give that one to Dave, actually, if that's okay.
Yeah, happy to answer that. So, speaking, on my experience in this area, many organizations are already doing aspects of sustainability that they don't even realize. And this is what I found in the various organizations where I've worked, in that, most organizations are, have efficiency programs. They're reducing their energy usage, they're reducing their waste, they're managing their resources efficiently. So that is a foundational element of sustainability. So it's understanding, I suppose, from a regulatory requirement, what's required, and the frameworks that are there, but it's also understanding what your customers, particularly your stakeholders, expect from you. So, if you're a customer, a B2B supplier of Kellogg, we have expectations around reporting carbon emissions, around reporting social accountability. We work with our suppliers on that, so we don't say, here's the standards, go and figure that out. We do understand that it's a journey for those suppliers as well. So I think speaking with your customers, that materiality piece that Caroline mentioned, I think that's really, really important as well. So I think, it's a difficult one. It's such a broad area, but there are lots of people out there. There's lots of advice out there. Speak to your stakeholders, speak to your customers, understand what it is they're looking for. I think that's a really, really good starting point.
And I think, as you mentioned there, there's almost like a certain responsibility that larger companies are taking on themselves to do this, to bring along suppliers, not to just hand them a book and say, tick all of those boxes, however difficult that might be for a business of your size. Do you notice that as well, Caroline? Are people looking to AIB as a leader in this area to set an example, to give advice?
Yeah, well, I suppose, when we were starting out as well, we looked to see what others were doing, people who had been doing ESG reporting for a long time. And we used, I suppose, what we saw there to kind of help us decide what frameworks we might report on. But also what we saw was really important was the tone from the top in the organization, and how important it was, to have the leaders in the organization really bought into the whole sustainability agenda and being very strong advocates for it. And in AIB, our CEO and our board are really passionate about this subject, and this has really, really helped us. And I suppose the other point I would make as well is that, when you start on this journey, it's not just about the reporting. It's really about looking at how sustainability is, part of how you do your business. And it's not something that runs parallel to it. And that's really, really important because, as Dave said, when you look at what is important from a sustainability point of view, it's not different to what's important to, your business generally. It's just, it's a different lens on how you put on what you do. So it's really, really important to consider it as part of your business's overall strategy.
That's a fantastic response, actually. The idea of leadership being such an integral part of this culture and the ethics necessarily of an organization as well. I've got a question here that I'd love to get an answer from in the very short period of time that we've left. Is what would you say are the two main issues or maybe barriers in the whole sustainability reporting space for accountants? And maybe this is one for Dee.
Well, I think, so I think accountants are still on a journey on this, and I think a lot of accountants feel that they still need to be educated on it. So one of the questions that we get a lot is, where do I look to actually make a start on this? So I think I think educating accountants on it is really, really important, and it's something that we are really focusing on. So I think where to start is one thing, and then I think it's how to look at bringing the rest of the organization with you. As Dave and Caroline have said, I don't think anybody can do this on their own, and certainly accountants can't do it on their own. I think accountants can really help, but they they really need to work with the rest of the team in the organisation.
So we're back to that concept that we hear so much around sustainability is collaboration. In fact, it's the last of the 17 Sustainable Development Goals, which is collaboration for the goals. So nobody can do this in isolation. And you mentioned, obviously, Dave, your whole presentation was about working with suppliers, working with the value chain. And as you mentioned, Caroline, when you began this as well, you looked to other people to do this. You looked for advice. So we were all kind of moving outside of what we would normally consider our areas of expertise and working with others. And I think maybe the final thing to say about this is, because time is very much of the essence, we have to do that now. We have to work together and work quickly in this, as you described, as the perpetually evolving space. So I think we are now out of time. I wish we weren't, because there's so much more that I would love to ask now that we have the opportunity to hear from speakers such as yourselves with this level of expertise and experience in this. But it remains for me to thank you very much indeed for taking part in this, Caroline and Dave, and of course our own Dee from the Institute as well. It's been fantastic to hear from you, and I look forward to seeing more from both AIB and Kellogg's in this area. And thanks one more time to Stephen Nolan and his team for the invitation to take part in Climate Finance Week Ireland 2021. So I think that's us over and out, and all the best. Bye-bye.
Hi, my name is Stephen Nolan, Managing Director of the UN-convened Financial Centres for Sustainability. I'm delighted that you're able to join us here today for a special session with Seamus Hand, Managing Partner of KPMG Ireland. Seamus, is delighted that you're here with us here today. Thank you very much for making the time. And before we get going, Seamus, we're in this absolutely fantastic studio. But 4 years ago, when we approached KPMG to support what was then Climate Finance Week 4 years ago, it was 1 day worth of events. And it was kind of small numbers of people who were really getting this topic back then. 4 years later, with your support, with KPMG Ireland's support, we've managed to grow Climate Finance Week into an international event. 38 events on this week, over 100 speakers, and today already over 4 million social media impressions. So thank you very much for that support. We wouldn't have been able to do that without KPMG, AIB and a few other partners here in Dublin. So thank you for that, Seamus. We genuinely appreciate your support.
You're very welcome, Stephen, if I can say thank you very much for having me, and we're absolutely delighted to be able to support you over the years. And I have many colleagues, you know, who are very involved in this space and who you know well, and have been telling me for a long time that this day was only a matter of time before it came, in terms of not just the climate change agenda, but actually the success of this conference. So well done to you and all the team.
Well, no, again, you know, Mike, we have Russell, we've got Shane, we had Kevin earlier on this week on an aviation aircraft leasing panel, which is also fantastic. So look, it's just super to have KPMG Ireland as our knowledge partner. Thank you for that. I suppose, you know, as you said, people have been telling you for a while this day is going to come where I'm going to get you as managing partner sitting here talking about ESG and sustainable finance. But, you know, as you said, your colleagues and yourself have been working on this for a while, but there was also a global announcement from KPMG last week around its new ESG strategy. Would you mind maybe filling us in a little bit on what's within that strategy, please, and what does it mean for KPMG Ireland?
Yeah, sure. And you're absolutely right, Stephen. We've been very passionate about this agenda for a long time, and we and a number of colleagues, including Mike that you referenced, have significant roles in KPMG globally, and we've been very much seeking to influence the direction of travel in terms of a global strategy that I was absolutely delighted to see coming to fruition last week when our global firm announced a $1.5 billion investment in a new ESG strategy focused on a number of different things across the globe, particularly focused on solutions for our clients, and that's looking at particularly putting in place infrastructure and centres of excellence, so hubs around things like decarbonisation, climate risk, sustainable finance, and other areas across the globe, and in particular in the sort of main regions around the world. Also looking at investing in our own talent, because a phrase that my boss, our global chairman, uses is often that ESG has moved from being sort of a specialist topic into the watermark that runs right throughout our business. And that means all of our 230,000 people around the world need to be upskilled in ESG. And so a significant part of it is partnering with institutions, including institutions like like Cambridge University, like University of New York, in terms of helping us develop programs to upskill all of our people. And on top of all that, it's about us realizing that it's really important on this agenda more than any other to give something back, and therefore we have a program called the KPMG Emerging Markets Program, where we look at supporting people in developing countries around who maybe mightn't have the same level of resources or skills to move as fast on this agenda, which you know better than anybody, Stephen, there's a major urgency on, and it's looking to accelerate that and make it happen quicker. So that was the big announcement this week, and as I said, we were very happy to support and indeed lead that, because it does very much support our own strategy locally.
Yeah, and as you said, 230,000 staff, $1.5 billion in investment. But go back to the 230,000 staff. You know, I imagine the estimate of how many firms those people touch upon on a daily basis at a global level is just phenomenal.
Yeah.
And so the ability, you said, to have everyone upskilled, because everyone can actually be a change maker with the firms, from audit to advisory to corporate finance and everything in between, right?
Exactly. I mean, that's the point, is it touches upon everything. So whether you're advising a company on an M&A strategy, they need to understand, either whether they're buying or selling, they need to understand the ESG impact, and indeed the impact on value of climate risk, for example, right? So that's part of it. If you look at audit being the most traditional part of our business, clearly ESG reporting and providing assurance around that is going to be a very significant part of our business coming, and it's something that we take an awful lot of responsibility for, and because there's an awful lot of trust placed on us at the minute in terms of financial reporting,
yes, and
that'll also happen in terms of ESG reporting. So it's incumbent upon us to have people that know enough and are skilled enough to be able to understand and assess the impact of different businesses from a climate perspective.
And one of the biggest challenges I'm seeing now across financial centres, Seamus, is the lack of talent around to assist in scaling sustainable finance, and that's a big issue across regulators, policymakers, and market actors. But building on your point there in terms of your own staff and the staff that you lead here in Ireland, across your Irish client base, which is significant, and as you say, it goes from the SMEs all the way right up to multinationals. What are you seeing in terms of activities around the climate space within those firms, please?
Yeah, and it has developed hugely even in the last 12 months. First of all, we set up a new division in KPMG in Ireland about nearly 2 years ago. So January 2020, we set up Sustainable Futures, which was designed to bring together all the different parts of our business with an end-to-end solution for our clients. Looking at ESG matters. A significant amount of it was initially focused on climate-related matters, so decarbonisation, climate risk, but it's broadened out into the bigger ESG agenda now. What are we seeing? We're seeing, first of all, from a strategy perspective, clients are very much looking to understand the impact that ESG is currently having, and more importantly is going to have in the future, so that they can think about how they need to be transforming their business. So the whole transformation agenda is huge, and developing strategies around that. And I actually think the pandemic has reinforced it. You've heard talk of people looking to capture and to make permanent the gains associated from some of the lessons learned in the pandemic, and I think none more so in the ESG agenda where you're seeing that. So that's one bit. The other bit that is, I'd say, at an early stage, but we're seeing a lot more of now, is reporting.
Yeah.
So lots of companies, particularly the bigger companies, are under significant pressure from the investor community to report a lot more ESG related information. As you know, there isn't an awful lot of consistency just yet in terms of standards around that, and there's a lot of work going on, and including ourselves and the other big four have got together with the World Economic Forum to develop some metrics around this, and I think that is going to have a significant impact when there's more standardization of that, and not only will there need to be more reporting and more organizations reporting, particularly as regulation develops, but then there's going to have to be assurance provided on that reporting. And I think that's really important, because we take very seriously the information we currently report and the commitments we've made, as all of our clients do, and therefore it's going to be really important that there's some element of independent assurance provided on those.
Yeah, and from what I'm hearing from you, this is a significant growth area for KPMG Ireland, and I love that phrase, end to end. Because I think you point out in these firms, it's not just I just need help here. It's I think transformation agenda is what you said there. It's across the entire firm, right?
It is, and it's really interesting as well, because not only are we sort of helping clients and thinking about how they might need to transform their business, but it's actually looking at where their business is going to go in their future. So it's not just a growth opportunity for us. More importantly to me, it's a growth opportunity for our clients, where they're looking at thinking about their markets, how their markets are going to develop, how they can continue to serve customers in an ESG environment, how they can influence policymakers, again, something I know close to your heart. We would spend a lot of time with policymakers, both here and in the international community, looking at how they can use the tools available to policymakers to facilitate the development of ESG strategies for countries, all for better, which again is, go back to some lessons learned from the pandemic. I think a purposeful approach to business has become a lot more relevant, and therefore I think the ESG agenda fits right into that.
There's almost kind of a responsibility. I think that's what you're also saying, that you have the skill sets. You're already, for example, in the audit side, you're trusted. Right, and now it's layering in or integrating, within that, as you said, the ESG agenda. Would you also make a good point? Some of the stuff that I see in my work, I've mentioned skills, data, it's inconsistent, so it's kind of holding back. And the lack of skills and data, then we've got a challenge around product and services. But I know within your innovation labs, if I can call them that, within KPMG globally and here in Ireland, as you said, you're working with clients to try and develop tools, metrics and frameworks. And then, as you said, that conversions of policy. But there's a lot also going on for industry, perhaps too much, because people are trying to cut through that in. Do you have any perspective on that?
Yeah, I mean, there's a huge amount of complexity around it, absolutely, and as you say, noise. And I think a lot of our clients are looking for certainty, or looking for a little bit more clarity from policymakers and from others, including ourselves, in terms of helping them identify a way of satisfying the desire, whether it be from investors or other stakeholders, for information, for details on strategy. But at the minute, there's a little bit of a fog around it, so they're trying to work their way through it. In fairness, I think some of the initiatives, and I'd be very hopeful for what's going to happen next month in Glasgow at COP26, that a lot of the things that are being talked about, I think, could provide a lot of that clarity, so that I'd be very hopeful that'll allow us to then help our clients move forward. And in fact, sustainable finance, I think, is a perfect example of it. I think that's going to be a significant element of that conference. And
actually, just building on COP, and again, the whole Climate Finance Week theme this year is about investing in net zero future. So again, if I may, and I know I'm just throwing the big questions at you, net zero and KPMG Ireland, where are you at with that agenda, please?
Yeah. First of all, our global firm made net zero commitments around this time last year, and we as an Irish firm followed that up with our own net zero commitment. And true to what I believe is, we need to walk the talk as such. We got that net zero commitment verified by Science Based Targets Initiative, and I think that's really important to me, so that we can be held accountable for that over the next number of years. So we've set out our detailed plans about how we're going to reduce our various scope 1, 2, 3 emissions, and be held accountable by reporting back to them on a regular basis. So I do think that's an important element of, like a lot of people are making commitments. I think it's important that there is accountability and measurement of those commitments, because otherwise it's not going to actually achieve anything. I passionately believe in that, and I think lots of companies do, and what we'd like to do is help them on that journey, basically.
And that's a really good phrase, walk the walk, right? So let me turn to the 3,000 odd staff that you oversee here in Ireland. There's people like yourself or Mike or Seamus at a partner level, and it takes a while to get to become a partner, and not everybody obviously does, of course. There's people at director, but you also have a lot of graduates. Like you're renowned in Ireland as a great place to work for, right? What in terms are you seeing come from your staff around this topic? Are they pushing you?
Yeah, absolutely. I mean, we are actually Graduate Employer of the Year this year, so we think we have a very good story to tell. And ESG, and in fact what we've done particularly on climate, is a huge part of that.
Really?
Both when we're recruiting graduates, but also in talking to our people. They very much want to be engaged in this. We're setting up, actually, and going to be announced later this month, details of a new council called Next Generation ESG Council, which is giving our younger employees a voice in terms of helping us in ensuring not just are we able to help clients with what they're doing, but we're also standing over that ourselves with our own ESG strategy, whether that be down into things like our inclusion and diversity strategy or sustainability strategy, and getting them very involved in that. We had a conference with our people earlier this year, and that was one of the key themes. And we got really great ideas, really great engagement, and our people, like I know graduates in lots of businesses, absolutely loved getting involved. Much more so, to be honest with you, than other strategies I've come up with.
Yeah, and that's a fantastic, because we had Colin Hunt here yesterday from AIB say 2030 is very close, but he was also talking on the panel as we launched the roadmap was about the skills here in Ireland. And there's people at your level in the sense of that skill built over many decades, but then the younger generations coming now into the workforce, and how can you accelerate that? Because we need everybody hands to the pump here. Moving to the last question actually, because just as I mentioned the roadmap, yesterday Minister Donoghue was good enough to launch Ireland's first National Sustainable Finance Roadmap, co-developed by the UN FC4S and Sustainable Finance Ireland, our local partner here. And it has 18 actions, goes across from talent, enabling environment, digital, promotion, and the number one is the development of an international sustainable finance centre of excellence. But from your perspective, how important is it that a financial services centre like Ireland, fourth largest in Europe, has its own strategy, its own roadmap, and that everybody has been involved in developing that?
Yeah, I think we've shown over the years our ability to pivot as a country in terms of how the market is developing, and I think that's exactly what we're seeing now, that the market has developed, and while organisations like your own, Stephen, have done a very good job of positioning Ireland in terms of sustainable finance, I think you're now seeing the investor community in particular waking up to it, and us now being positioned, and it's great to have policymakers behind it, to see Ireland as a centre for that, and to put real investment behind it, I think will really allow Ireland to continue playing a significant role in an industry where I think we have great credentials, but where there's great opportunity for us to even play a bigger role.
Yeah. Okay. Well, look, I really appreciate having this chat with you, Seamus. It's Climate Finance Week Ireland 2021. You guys have been here the last 4 years. You've backed it, and I hope you're proud in terms of everything you said within your own firm, but also supporting this become what it has, a truly international event. I would just say to anybody listening in, Climate Finance Week 2021.ie, within that, go to our Knowledge Centre. There's a lot of good reports there from KPMG that they've helped develop as we build towards Climate Finance Week. Some great insights from the firm at a global to a local level. So Seamus, thank you very much for being with us today. Really appreciate it.
Thank you, Steve.